Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis, where we basically look at the technical charts and then try to understand what happened during the last trading day and then plan for a better trading day. That's tomorrow, and it's May 2nd, Thursday, 2024. So we had very dramatic moves in the indices in the last week. Markets hit new record highs, and then suddenly at 2:30 in the afternoon it gave back most of the gains and that was negative, trapping the bulls. So let's try to understand what exactly happened and also try to plan something for the next day. Today was a trading holiday, May 1st, and today evening we have the Fed meeting outcomes that's going to come. So that's market will be able to react to that outcome of tonight's hawkish or whatever dovish views, whatever they have, only on the next trading day. So let's try to see what is the candlesticks and then conclusions. We'll not be able to know the Fed event outcome. The market may react as it likes, but all we can do is we can learn about probabilities. So basically the candlestick that you see here is bull trap. It's an inverted hammer. Inverted hammer on the top of the trend can be dangerous if it confirms, especially if it is an inverted small body candle indice after a big wide green candle. Can form 3-star bearish patterns. This shooting star kind of patterns can emerge. It is not confirmed as of now. So price goes below the third candle, that's tomorrow's candle, also no, then it can be even more dangerous. So you have to watch out for the law of yesterday's candle as well, as to know if the price is going to turn bearish or not. So that's a bull trap, small body decisive inverted hammer. Again here also we have almost like an inverted hammer. And look at the big size. That shows how the market moved. Big violent moves and then quick reversals, trapping the bulls. And here also we have the probability of a bearish pattern or shooting star kind of pattern emerging if the price goes plus the third candle also, right? And probably this could just be a profit booking that came in when market hit the all-time highs, or this could be some, some partial profit that may happen, or could be an expiry play, which was Banknifty expiry that happened on 50,000. Very close to that, it reversed. It didn't touch the 50,000 big rounding number, but it inches away from that, it reversed. It formed a red hammer with small body that is indecisive, and also an inverted hammer. Inverted hammer on the top could be potential reversal. Inverted hammer after a big green could be a 3-candle shooting star kind of negative pattern, but not confirmed. So there are probabilities of reversal that can happen here. Better be cautious. Or it could just turn out to be another profit booking that happened on an expiry play. Market was slightly cautious before the event outcome that can come US today. So if you look at the trend lines, you can see that we have still some more space left towards the top, towards the 22,900 on the Nifty. So the first resistance would be that 22,800 first, 22,900, 23,000, and then probably it can go much beyond that towards the 22,500 as well, once it breaks out of this inside trend line channel. Now for the Banknifty, it had already broken out. There is a cup or a rounding pattern breakout that has happened, and that if that turns out to be true, then the moves can be really big. Exactly at the top of the trend line channel is where the reversal has happened, and if it breaks out from here, it could go as high as 50,500. At that place there has to be some caution, because it's a outside blue color trend line channel that you're seeing, which is serving from 23.7. That's almost more than a year how much in a year. So market could touch towards that top trend line channel and then pause for a while. So if you look at the resistance on the upside, the first one would be to take on the 50,000. So the all-time high is also very close to that. After that, 50,500. That's uncharted victory, but that would be where the resistance would be. And downside, I will look at supports. The first support coming at major support would come at 22,400, which is about the 20 exponential moving average, and after that the 21,200, which has got the gap support and the 50 exponential moving average as well. And the natural retracement of 23 would come in at 21,900. Before that, you have the 22,000 big rounding number support as well. Banknifty, if you look at the supports, the first one would be the 49,000 big number. That is also a breakout zone. The previous high is seen there, so 49,000 is going to be some kind of support, and if that breaches the neckline of the rounding pattern, comes at 48,900 zone, that will be good support zone. And the Fibonacci 23 comes in at 48,150. You have the 20 exponential moving average at 48,131. So 48,150 is going to be a very good support, considering the confluence of the 23 Fibonacci retracement plus the 20 exponential moving average. That is breached, then you have the 48,000 rounding number, and then 47,500, 600 support would come in at 50 exponential moving average, and then 47,000 the rounding number, and if that is breached, you go to the 100 exponential moving average at 46,869. 38 exponential moving average would come in at the same zone of the 47,000 nearby zones. So that's the support resistance on the indices. Let's get back and summarize it. So what we've been trending on the last trading day on Nifty. That's for the second time, it was second day that it was consecutively having a trending move, and hit new all-time highs. Right, although not too much. So thereby it made a full recovery of the last retracement, and then in the afternoon it had a sharp fall of 1%, and points, more than 600 points, and closed negative. All the gains were going back with negative 38. That's flattish negative, right? 0.17% down. And remember, it's at 22,600, and it's at 35% value with just 5% retracement so far. Still above the 20 exponential moving average, but the hammer that is formed is inverted hammer bolt trap. Nifty also was trending up, but it went very strong, and it hit new all-time highs. And that all-time highs was for the second day, and it almost went kissing distance to the 50,000. Right, from the 49,000 something. So it was a very, very big 1.5 nearby points of fall from the top. Right, so that was a very big fall, and finally it was flat negative, just 27 points down. It also formed an inverted hammer and bull trap. We've already seen that, but still above the 20 exponential average. So the value in the Banknifty is near 39% at 49,397. Intraday, both the indices had a gap up and then trending up, and then hit all-time highs, and then sharp reversals to finally close flat negative. Levels we already seen. I'm not repeating that. We can note that we're going to much more deeper support resistance levels. So in addition to this, lookout zones of properties of resistance and supports. Let's put in buckets what's in favor of the bulls and the bears. So market at all-time highs, especially on both indices. 1,600 point, 3.4% move just 2 days in the Banknifty. That was the kind of move that Banknifty was doing, except for the pullback, where it gave most of that, half of that. So a full recovery has happened from the last retracement of 5% from both indices, and coupled rounding panel breakout is seen on the Banknifty as well. So the higher high, higher low pattern is also maintained on both the indices. 20 exponential moving average is intact. Moment was climbed to the bullish RSI above RSI 68 Banknifty, but Nifty is set to make that happen. Trend indicator ADX is already closed over, but weakish strength. Global zones on DMI positive zones on ADX on both indices. So trend is fine. Short-term momentum has to catch a little bit. Momentum and the bulge bands has just started the beginning of an expansion. Right? But Friday's with last trading day's move, that expansion is not confirmed. So it's just the beginning of the expansion, and which are bullish bias because the median price is below that. So potential upside moves is what the bullish bias is showing. So the secondary indices are closed red, and heavyweight stocks that constitute maximum to the indices are also closed red the day, except for the auto reality and for Reliance in the heavyweight stocks. This is still coming in the bulls because the fact is that it was a profit booking. The assumption is that there was a profit booking that happened the other day ahead of the Fed event that was coming. So it was only that, and not because if you look at the momentum and momentum in the short term, for it's all mostly remaining sideways except for the IT sector indices. If you see heavyweights, it's just the infield the collateral just in the so these are all sideways or bullish zones mainly. So sector indices and heavyweight stocks are not fallen deeply in the bear zones yet. So what is in favor of the bears? If you look at the daily candlestick patterns, could turn to a 3-star bearish shooting star kind of patterns. It's not confirmed, but there is a possibility you cannot rule it out. Momentum RSI is still in the sideways zone. In the case of Nifty, it has just declined above the RSI 60. India weeks had spiked up 10%. I just forgot to look at the India week. So it is spiking again 5%. So 12% previous day, and again it has spiked. So it's 17% of spike that has happened. So the previous day as well, the India week, so the market made the first all-time high on Monday. It spiked up 12%. The market is moving up. Wick should not have spiked, should have cooled. Ideally, right? But it did the other way. And right now it is showing that it's at 12.87, right? So that is something that goes in the bucket of the bears, because the fact that Wix is not behaving the way that it initially should have. The index is green and spiking up about 6.3, right? Rupee is also weak as before, being centrally controlled by Reserve Bank, 33.45 and about 6.3. So that's not good for an emerging market like India, right? Crude oil is showing some read. Cool off has happened, 8% cool off has happened. It's fallen to 80.83 from 83 previous day. So that's good, but still falls in the BS because it's still not very far from the top of the trendline channel where it was trying to break out. Gold is also green, and it had cooled off 6%, but still green, and that is also not very far away from the all-time high. So that gives a concern as to if the money is flowing to the safer hand from the equity market or not. So that's why it goes in the favor of the bears. US indices are showing deep red. The last trading day, 6 to 8% of fall has happened. It was trying to move up 3 to 4% up, but it didn't sustain. It has fallen back again. The last Dow Jones, Nasdaq, and S&P 500. So we'll have to see tonight what happens. Tomorrow morning we'll have to see how these indices have reacted to the Fed outcome and to get the real picture. But as of now, there is possibility for more retracement that can ultimately, because it seems like it is going to retest the previous low. So if we're tracing more in some other market, and so some reflection will come in our markets also. Tomorrow is the expiry of the Nifty, weekly expiry. So futures are showing long build-up and long unwinding, short build-up and long unwinding. It's bearish in nature, of course, during the Friday's move. So it's built up as it happens, it's bearish. Operator's OI is also fallen from the 1 plus, which is bullish, but right now it's not bullish enough, less than 1. But almost in there, neither bearish. So it's somewhere in between, right? So that brings in the indecisiveness factor once again. Fyers were buying the other day, 1,072 crores of buying in the cash market happened, but otherwise, if you look at Fyers had been selling the whole of the entire April, full month, except for a few days they were buying. So this buying cannot be taken as a big deal. right? So foreign money is not flowing in. It's domestic institutions money that's flowing in huge, and that's what's holding the market, right? So so those are the things. If you try to bucket the different parameters in favor of the bulls and the bears, and so it seems like we are breaking out. We already hit the new all-time highs, and we have recovered fully from the retracement that happened. Market is all-time highs basically. So higher low, higher patterns, 20% moving average, above price movement, Bollinger Band slightly expanding. So all is all giving an edge to the bulls, right? The sharp fall trapping the bulls that happened last week. There is a potential for a three candle bearish pattern moves is possible. So even while the trend has turned back in bullishness, the momentum is yet to climb in both of the case of Nifty. So that's how it is placed. The investors can use all of these dips as potential opportunities to buy long-term quality stock investments. SIP mode, those are opportunities for that. But if you trade this one, we're looking for direction. We'll have to wait for some more before we get the confirmation, at least on the short-term RSI. So it's still a sideways consolidation. It's move that is happening, even though the breakout has just happened, but we just don't have a confirmation yet. That's where we are. So we just have to wait. Probabilities are that this breakout could come in and then the market can move. The only thing is the market is heated up. It's at million stocks are overvalued, and we are approaching 23,000, and it's heated up. So the moon and the FI money is not coming in yet. So the reason why the up moves for big breakouts, if option buying is that's what it is looking, then it may not come in that easy. The spreads may work out. This could turn out to be an exhaustion move as well, potential. Market just going and kissing distance away from 50,000 and then pulling back. So this could turn out to be a potential exhaustion move, so I cannot rule out the potential reversal as well. So be careful, you never know what happens. All that we can do is manage risk, position size, have stop losses, right? That's all. So which affect me, the outcome is the market will really react whichever way it likes. You never know what you have to we'll have to wait for tomorrow for that. So coming weeks, the earnings, election outcomes, all that crisis, all that events, major events, outcomes, reactions, and all that come in to the entire movement. So we have to be cautious. Market can be jittery. Already has shown signs of exhaustion several times by big up moves and big down moves. So you have to be cautious, and volatility is not reflecting the true picture. You have to realize volatility, and in blind volatility, spread difference is not great for the option sellers. So option sellers does not even have a 80% in favor of them, so you have to play it very closely. In addition, they have some Jane Street kind of injections news that's floating around, raising performance for the option traders. So manage risk and play it safe. Happy trading, happy learning, happy investing. Bye bye.